Suppose you've just launched a business selling custom sneakers. Your first sale? A stunning $200 order. Exciting, right? But wait, how do you ensure that every dollar is accounted for? What if I told you that over 60% of small businesses struggle with accurate bookkeeping? This could lead to financial disasters and missed opportunities. In today's video, we're going to unravel the complete accounting cycle process, a powerful tool that can help you not only keep track of your finances, but also ensure your business thrives. Understanding the accounting cycle. Before we jump into the nitty-gritty, let's define what the accounting cycle is. Think of it as a roadmap that every financial transaction takes in a business. From the moment you sell that pair of sneakers to when you report your earnings at tax time, the accounting cycle encompasses every crucial step in managing your financial data. The accounting cycle is vital for any business, whether it's a startup or a large corporation. It helps maintain accurate records, ensures compliance with financial regulations, and provides insights that drive decision-making. Today, we'll break down this cycle into its essential steps, exploring each in detail. And if you find this information helpful, don't forget to check out our online academy at Education Bench, where we offer resources and consulting related to accounting. 1. Identifying transactions. The first step in the accounting cycle is identifying transactions. This step may sound simple, but it's foundational. Every time money moves, whether you're selling a product, paying for supplies, or incurring an expense, those are transactions that need to be recorded. Let's consider our sneaker business. When you sell a pair of custom sneakers for $200, that's a transaction that needs documentation. But remember, transactions also include non-cash items, such as accruing expenses or receivables. For instance, if you offer a service and the customer agrees to pay later, that transaction is still valid and should be noted. 2. Recording transactions. Next, we move on to recording transactions. This is where the magic truly begins. Each transaction gets entered into a journal, often called the Book of Original Entry. In double-entry accounting, every transaction affects at least two accounts, ensuring the accounting equation, assets equals liabilities equity, remains balanced. Let's return to our sneaker business example. If you record the $200 sale, you will increase your cash account and simultaneously increase your revenue. It's crucial to be meticulous during this phase, as this step forms the basis for all subsequent calculations. 3. Classifying transactions. Once we've recorded our transactions, it's time to classify them. This is about organizing transactions into categories to simplify analysis and reporting. Common categories include sales revenue, cost of goods sold, operating expenses, and other income. For our sneaker business, you might classify sales under sales revenue and expenses under cost of goods sold when you buy materials. This classification helps streamline financial reporting and is especially helpful when preparing for tax season. 4. Summarizing transactions. The next step is summarizing these transactions. After classifying, we create a trial balance that ensures our total debits equal total credits. This is like a financial health checkup for your business. If something doesn't balance, it's a sign to go back and investigate discrepancies. Imagine you have multiple sales transactions and various expenses recorded. Summarizing these into a trial balance provides a snapshot of your financial situation. You can easily see if you're making a profit or incurring losses. 5. Reporting financial statements. Once you've summarized your transactions and ensured your trial balance is accurate, it's time to report your financial statements. This is where the real storytelling happens. The 3 key financial statements you'll prepare are the income statement, balance sheet, and cash flow statement. The income statement tells you how much profit you've made over a specific period. It's your business's performance report. The balance sheet provides a snapshot of your company's assets, liabilities, and equity at a given point in time. And the cash flow statement details the flow of cash in and out of your business, crucial for understanding liquidity. For our sneaker business, you can see at the end of the month if you've turned a profit after accounting for all your sales and expenses. Financial statements are vital for stakeholders, investors, and tax authorities, making this step essential. 6. Closing the books. The final step in the accounting cycle is closing the books. This means preparing your accounts for the next period. You'll need to zero out temporary accounts, transferring net income to the owner's equity account. This process ensures that each accounting period starts fresh and clean. It's similar to resetting your gaming console after a session. It's essential for the next round of play. Closing the books also helps identify the performance trends of your business, offering valuable insights for future planning. Common pitfalls and solutions. While following the accounting cycle, many beginners fall into common pitfalls. Misclassifying transactions can lead to inaccurate financial statements, while missing journal entries can create discrepancies. The impact of technology. In today's fast-paced world, technology plays an increasingly vital role in the accounting cycle. Software like QuickBooks, Xero, and FreshBooks automate many of the steps we discussed, minimizing human error and saving you valuable time. Imagine you're juggling multiple orders for your sneakers. Using accounting software, you can track sales, expenses, and invoices all in one place. It allows you to generate reports instantly, so you're always in the loop regarding your business finances. Plus, with cloud-based solutions, you can access your data from anywhere, whether you're at a cafe or your home office. Investing in accounting software might seem daunting, but the long-term benefits, accuracy, efficiency, and peace of mind far outweigh the initial costs. And many of these platforms offer user-friendly interfaces, making it easier than ever for beginners to dive into financial management. To provide more depth to our understanding, we have a special guest joining us. Insert expert's name, a financial advisor accountant, for a brief interview. Thanks for having me. Mastering the accounting cycle is not just for accountants, it's for anyone who wants to run a successful business. By understanding these steps, you're better equipped to make informed financial decisions. You can spot trends, identify opportunities for growth, and ultimately maximize your profitability. Real-life applications and case studies. Let's ground our understanding with some real-life applications. Consider the case of Sneaker Co., a startup that faced serious cash flow issues in its first year. By implementing a disciplined accounting cycle, they identified that they were overstocking inventory and not tracking sales effectively. Once they classified their transactions accurately and used software to monitor cash flow, they could see which products were selling well and which weren't. This insight allowed them to adjust their inventory, leading to a 30% increase in sales over the next quarter. Their story illustrates the power of the accounting cycle in identifying issues and making proactive adjustments. Practical tips for beginners. As we wrap up, here are some practical tips for anyone just starting their journey into accounting. Stay organized. Use accounting software to keep all your records in one place. Learn continuously. Invest time in understanding basic accounting principles. Online courses, webinars, and workshops are great resources. Keep up with regulations. Stay informed about tax laws and accounting standards that affect your business. Regular reviews. Schedule monthly reviews of your financial statements to catch discrepancies early and understand your business's financial health. Seek professional help. If you're feeling overwhelmed, don't hesitate to consult with a financial advisor or accountant. They can provide personalized guidance tailored to your business needs. You've made it through the complete accounting cycle. If this video has equipped you with valuable knowledge, give it a thumbs up and share it with fellow entrepreneurs. And remember, at the Education Bench, we're committed to helping you enhance your financial literacy. Be sure to subscribe for more insights on accounting and finance that empower your financial journey.